Hello, good morning. Happy Friday to everyone in the house. And I'm so excited to welcome you to another promising session as we take it a little step further to review all the pairs that we have been monitoring since the beginning of the week, and at the same time use the information we have gathered along the line to identify potential trading opportunity ahead of the London and the New York session today. Well, it's the last trading day of the week, and there is always this psychological expectations as regards last trading days of either the week or the month, as majority who had actually taken advantage of a significant move during the course of the week will definitely want to be doing some profit taking activity today, and this most of the time reflects on the charts in the form of price action moving in the opposite direction of the prior leading price action. So these are one of the things we are going to be looking at today while we review the charts and monitor how price action has been reacting in the last 4 days in every market that we have been monitoring so far this week. And for those who are joining us for the first time, you are highly welcome. I'm so glad to have you guys around. And what I simply do here is to do daily reviews of the instrument which I publish during the course of the weekend. So normally during the weekend like this, I normally have series of events that series of instruments I want to be looking at ahead of the week. And days like this, we just come here to review the 1 hour charts and see how we want to be positioning ourselves ahead of the London and the New York session while we get things prepared. So once again, you are welcome on board, and the first thing we want to be doing here is to go right into the economic calendar. You all know how we do it. That's the first thing we want to be doing so that we can keep tabs with what is really going on from the fundamental aspect of the market. And what I do here is I use the FX Street economic calendar, and what we simply want to be focusing on are high impact events that are going to be affecting either of the currency pairs, either of the currencies in the instrument that we are monitoring. And since this week we have the US dollar, the pound sterling, and the Japanese yen. So these are the high impact event we are going to be looking at. And for today, Friday, May 19th, we are only looking forward to the first German speech, which is coming up later in the day. I think about 7 hours from now, we are going to be hearing him have a speech, and definitely everyone in the market will be looking forward to this event. And what is going to say today has a whole lot of weight on the US dollar. So let's see how price action is going to be anticipating this event, and at the same time we want to see how the market will potentially react to that event. So with that being said here, let's dive right into the chart and let's see what is really going on in the market from a technical standpoint. And before I kickstart, I would like to seek your permission to give me a couple of minutes. I want to quickly sort out some things, and I'll be right back in a moment. So please bear with me, please. Sorry. All right, I'm sorry for the break in transmission, and I had to sort out some personal issues, but things are quite fine right now. So, where were we before the break? Okay, so I was talking about starting up with our first commodity for the week, for the day rather, which is the US oil spot. And on the US oil spot, we have been quite profitable so far this week on this commodity. As you all know, we have been riding this move all the way from the $70 level at the beginning of the week. Remember, this was where price action started this week. We had it somewhere just right around the $70 level here at the beginning of the week, and we saw how price action continue to reject that area, giving us a clue that sellers have been finding it very difficult to break down that psychological level. And as a result of that, we had this demand zone situated around that area, and price action has respected that area actually buying pressure. So we had our first buy position around this area on Monday, which we took advantage of. I think the first position gave us about 160 pips. Then we also had a second position at the $70.40 area, giving us about 130 pips before the whole choppy situation we witnessed on Tuesday happened. Though we had another sell position here after identifying a potential reversal pattern, we saw the breakdown of the structure, giving us a selling opportunity. At that point, price rose to about 90 pips in our favor before this old bullish momentum began. And since then, that was on Wednesday morning, we were also part of this move as we rode the breakout of the $70.91 level, which happens to share a confluence with the trend line we identified on the 4 hours time frame. And in fact, this move here gave us over 500 pips as we had multiple entries after price action broke out of key structures like the $71.40 level, and then we also had structures like the $72 area broken to the upside, which led to our TP target. So far so good this week. We have been quite profitable on the US oil spot. And yesterday, we also looked at the old simple situation we saw here, where price action was caught within a range, and then we anticipated that price action could likely break out or break down of that channel for an opportunity to trade. So you know how we do it whenever we have this kind of choppy situation. So with our buy stop order above the key structure and our sell stop order below the area, we had the privilege of joining this sell momentum to the downside. Price action came back to retest that structure, and we had about 100 pips move in our direction before this old choppy situation began, pushing price to the upside. And one thing, if you recall what happened yesterday, we actually projected that the bearish momentum, that is, if price action breaks down the $72.50 level, that is likely going to be a retracement of that impulsive move. And to help us project where the impulse leg could likely culminate here, we used our Fibonacci retracement tool to identify our golden zone area, where we said if price action comes within the structure, a reversal pattern around that area is likely going to be inciting the second wave of bullish momentum. And if you look at what has been happening in this market, at least towards the end of the New York session yesterday, we saw our price action begin to find buying pressure just right within the potential buy zone we identified during our live session yesterday to fulfill our technical expectation in this market. But at this point in time, personally, I missed out on this opportunity. That is the breakout of the $72 area, which came in with an engulfing bullish candle, as this actually happened during the midnight here. So I was definitely fast asleep at that point. But if you are taking advantage of that move right there, well done to you for being on standby to catch that move. as you will currently be in profit at this point, though it's not that significant at this particular point in time. So my advice is, if you are in a buy position from this current structure, you want to be moving your stop loss to probably your entry point to secure this current position, as anything could still happen from this area, as we can see how sellers has been trying to negate all bullish attempts from this area. So with a position secured at this point, what is going to be our plan for today? Well, it's quite simple. The first thing I would like to acknowledge here is the fact that price action, since price hit our TP target at the $73 area, we have seen a situation here where price action had continued to find lower highs in this market. And for us to acknowledge this, I was able to spot this trend line after connecting the series of lower highs that you can see here. And with this whole situation here, we cannot ignore the potentials of sellers at this point. So the retracement we projected earlier, and that is yesterday, might likely continue further to the downside. So let's keep that in mind while we try to figure out what our next line of action will be here. Now, because of the fact that I've seen a structure here, a pattern here that looks more like a double bottom structure, so if I give you a visual representation of what I'm talking about here, so we have the impulsive move right into the $71.50 level, and then we saw our price came back into that area around the $72 level, and then price came back again to around the 71.70, and then price was unable to break the previous low. And you know, from a technical standpoint, whenever we start seeing higher lows like this in the market, it's a sign that buyers are gradually gaining momentum behind the scenes. And this led to this engulfing candle that we saw here, bringing price into the $70.80 area. And from the look of things, you will agree with me that we have something that looks more like a double bottom structure, which from a technical standpoint is a very, very strong reversal pattern. Now, will this pattern hold? That is the next question we are going to be asking. So that is why I said that for those who have a buy position, kindly move your stop loss to your entry point, lock in or secure this position, as we never can tell if this reversal pattern is going to hold unless we cite confirmations in that regard. So with the neckline, with the potential reversal pattern identified here, you know how we do it. The next thing we want to be doing is to identify a neckline which falls exactly along the $72 area. So we have it around that area there. And since we had the breakout of the neckline here, from a technical standpoint, when price action breaks out of the neckline of a reversal pattern, we expect it to come into that structure at one point to inside another wave of bullish momentum. So at this point in time, we want to be very, very patient in this market to see how price action is going to be reacting to the $70 level to now decide if we are going to be buying at this point, or we probably need to hold on a little bit more for another chance to buy the US oil. So if price action gets into the $72 area or around that area, or it could even go as far as breaking it down a little bit, but the most important pattern we want to be seeing here is something like a reversal pattern, giving us signs that buyers are gradually gaining momentum here for us to be part of a bullish move to the upside. However, if price action drops and breaks down the $72 area and selling pressure resumes below that structure, remember that we still have a potential buy zone within this area. Remember, this is the window for that potential buy zone. So as long as price action remains within this area, there is still a chance for us to buy the US oil spot around this level. And one important thing about this whole structure is that it shares a confluence with the trend line we identified on the daily time, on the 4 hours time frame. So let's go into the 4 hours time frame here so that we can all see things more clearly at this point, so that we can anticipate it appropriately. So we have noticed here at the beginning of the week, we acknowledge the fact that price action has been bullish in the last 1 week, and we connected a series of higher lows here to give us this trend line, ascending trend line you see on your screen right now. So there is a chance that price could still drop into that trend line to incite the second wave of the bullish momentum. So it's a very critical structure we have here, and if price action ever breaks down the trend line, then we could be looking out for selling opportunity, add more position to our existing trade. So let's keep this in mind. You might want to map this out on your chart so that you don't miss out on these opportunities that we have here. But be rest assured that I will be with you right in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So these are my views here on the US oil spot for today. So let's remain patient and wait for price action to react to the $72 level before making an informed decision on this one. Definitely I'll be giving you an update in that regard. And if you have any questions whatsoever, feel free to let me know right in the comment section. So with that being said here, I will be moving on to the next instrument. And the next instrument we are going to be looking at today is the GBPUSD. And in fact, the GBPUSD is one of our most profitable trades for this week, as we have been selling this pair since the beginning of the week. Though we had some moments that we had some buying opportunity, which actually gave us some profit. So let's quickly run through how the week started for us on the GBPUSD. Now, remember at the beginning of the week, we initially acknowledged a very strong key level at the 1.24500 area, which we said here it will be serving as our yardstick for trading activity for this week. And one thing, you know how we use our key levels, we want to see price action above the key level for us to look out for buying opportunity. And if price action breaks down our key level, definitely we want to be looking out for selling opportunities around that area. And as you can see here, the week started on a very strong bullish note as we saw buy pressure accumulate around that key level, pushing price to the upside, and with our resistant line sitting at the 1.24800 area, we had a buy stop order above that structure, which was triggered, giving us our first buy position for the week. And we also added more positions at the breakout of the 1.2500 level. So we had about 40 pips thereabout, though it wasn't that significant, but we were able to lock in some profit actually on that one. Then we begin to see sell pressure resume again. And on Tuesday, we agreed here that the bullish trend line here will be our yardstick for guiding trading activity on Tuesday. And what we said here is that if price action remains above that trend line, we shall feel comfortable in a buy position, looking out for more opportunities to buy the GBPUSD. But if price action breaks down that structure, we are going to be looking out for selling opportunities in this market. And what we did here is that if price action ever breaks down that structure, we are going to be having a sell stop order just right below the 1.248 to be part of the bearish move to the downside. And we saw the breakdown happen actually just as projected. We saw a couple of retests of structure, stop loss, sell stop below that area, and we were able to take advantage of that. Price moved about 50-60 pips in our favor before the bullish momentum happened. We bought again around this area, but that move did not last long as we were taken out of this position. And not until yesterday morning we had the privilege of being part of a sell position, and since then price action had continued to find lower lows and lower highs. So since Thursday yesterday, we have been selling the GBPUSD, added more position, had the breakdown of key structures like the 1.245 and the 1.242 area in the last 24 hours. And I shared here this morning that I think during the later part of the New York session yesterday that we want to be securing all our sell positions by moving our stop loss accordingly to lock in that profit. As we can see, as soon as price action got into that area around the 1.23900 area, we had been noticing some buy pressure around that area. So we needed to be very, very careful. So I shared there this morning. Let us look at the commentaries here together. So this is my TradingView platform where I share my commentaries on each of the instruments that we are monitoring for the week. So I shared here that, hold on a second, I'm trying to load this up. So I shared here that this morning actually that we want to, hold on a second. All right, so this is it right here. I said after wholesale position is taken out, buy pressure appear to surface as the 1.23900 level becomes a barrier to push price to the downside. While the option of selling opportunities remain valid at the breakdown retest of the 1.23900 zone, we can't ignore the potentials of buying opportunities above the 1.24200 zone. So I said update coming up soon, though I wasn't able to give an update before the live session as the structures still remain the same as what I saw prior to dropping that commentary there. So now let's go back into the live chat and see what is really going on in this market and how we intend to take advantage of the trading opportunity during the London and the New York session today. So the first thing I would like to do here is to acknowledge the fact that price action has been bearish. So we have this impulsive move to the downside for the last 24-36 hours. We saw our price drop significantly into that 1.23900 area, and since price tested that level, it's quite interesting that we saw our buyers continue to negate all the sellers' attempts around this area. So we saw the first touch here, price climbed up into that area around the 1.24160 area, dropped again to the downside, and the inability of price action to break down the previous low is, from a technical standpoint, a sign that we might likely be seeing a reversal pattern anytime soon, which could come in the form of a double bottom structure, which from a technical standpoint is a very strong reversal pattern, especially on our hourly time frame. Now, with this whole situation figured out here, so we have a potential reversal pattern gradually unfolding at this point, and you know what we do next whenever we have a potential reversal pattern unfolding. We want to identify a neckline which we are going to be using to validate the potency of this reversal pattern, as a breakout of that neckline will definitely confirm that buyers might likely push price to the upside. So the next thing we are going to be doing here is to identify the neckline, and to do that we bring out our line chart, and then I think this is the highest point here, so it falls somewhere around the 1.24140 area. So let's map that out so you can do that right on your chart so that you can have a point of reference. So we label this area for the sake of clarity, 1.24140. Is that what I called it the other time? I think so. So 1.24140, I guess. All right, that is it right there. Now we have a neckline situated around that area, which definitely is going to be our yardstick. So what we want to see here that will validate this reversal pattern is a breakout of that 1.24140, breakout of that structure, and then we look out for retest. Remember, we are on a very strong bearish momentum, so we still need some confirmation here before we want to jump into any opportunity in this market. So I want to see a breakout of structure. As soon as the breakout of structure happens, we scale down into our lower time frame. It could be your 10, 5, or 15 minutes time frame to look out for retest of that line to give us a confirmation. So the retest will come in the form of buying pressure around that area where we see signs that sellers are finding it difficult to drop back below the 1.24140. Then at this point, we want to feel confident to join a bullish momentum to the upside. And the buy potential in this market has a tendency of giving us multiple entries, as we have key structures like the 1.245. If broken, we want to be adding more position to our existing trade, and we also have structures like the 1.248 to add more position to our existing trade. Then we also have the 1.25 area too as well, which has been a strong selling niche since the beginning of this week. Let's see how price action reacts to that area to determine if we are going to be adding more buy position or probably get ready to sell the GBPUSD at this point. So this is what I'm looking out for today to buy the GBPUSD on this chart. Now, in as much as we're looking out for buying opportunity, you know how we do it here. We also ensure that we also analyze the potentials of the sellers too as well. As you all know, it has been a bearish momentum since the beginning of this week, and we cannot ignore the potentials that sellers could still come in at any point in time. So if this is going to turn out to be a bearish trend continuation to the downside, what do we want to see on this chart that will give us the confidence and leverage to be part of that bearish move? Now, if we consider the bearish impulse leg that started here yesterday into the structure here before this old choppy situation we saw here, there is also a likelihood that this old choppy situation could transition into a trend continuation pattern in the form of a bearish rectangle or probably a flag pattern, where a breakdown of that support line had the 1.23900 area to incite or give us a signal that sellers are likely going to be pushing price further to the downside. So with a sell stop order below the 1.239, I want to be part of another wave of bearish momentum to the upside. So let's be on standby to catch either of this opportunity. We are at a very critical point in the market, but what makes this interesting is the fact that it is a very simple setup that we can actually use to guide our trading activity today. Be rest assured that I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due, probably if we do have any change in perspective from whatever we discussed here. So if you have any questions regarding what I just explained, feel free to let me know right in the comment section. So I will be moving on to the next pair, which is going to be the XAUUSD. And in fact, the XAUUSD is one of the most profitable trade for us this week, as we sold massively since the beginning of the week until this moment. On the last 24 hours, we saw a huge traction from the dollar, and this could be connected to the positive expectation of the US debt ceiling issue that Joe Biden said on Wednesday. I think that he has a positive affirmation that this will be resolved before the end of the week. So we are hoping, and I think this is the hope that everyone is hanging on to put more and invest in the US dollar, which we actually saw in the last 24 hours as we saw the gold crash to the downside. So let's quickly look at how the week started for us on the XAUUSD, and this is what we saw at the beginning of the week. This was where we were at the beginning of the week, and it was around the $2,020 level, which was initially our key level for this week. And you know how we do it. Whenever we have key levels, we need price action to be above our key level for us to be thinking of buying. And if price remains below our key level, definitely we want to be thinking of selling. And if you look at the situation, the position of our key level here, and look at how price action has been playing out since the beginning of this week, you will realize that at no point in time did we see price action break out, retest our key level. And what this simply says is that sellers are really very strong in this market. And one other thing that also buttressed our bearish bias for this week was the fact that we were within a descending channel, which has lasted 2 weeks now. After connecting the series of lower highs and lower lows, we had this old trend line figured out at the beginning of the week, and we saw how price action was trading just right around the resistance line of that descending channel throughout the course of, I think, the first 36 hours of the week, around that area. And remember that we had this bullish trend line figured out after connecting the series of higher lows, where we said this trend line will be our yardstick to guide trading activity on Monday, and we said if price action remains above that trend line, we want to be looking out for buying opportunity, feel comfortable in our buy position. And what we agreed here is that we need a breakout of both the 2020 and the resistant line of that descending channel to give us a signal, after which we want to see a confirmation in the form of a retest of structure to join that move to the upside. But unfortunately for the buyers, this never happened, as you can see here. Instead, what happened was the breakdown of that trend line, which we already agreed on Monday that if price action breaks down the trend line, we are going to be getting ready to sell. Then we have a sell stop order just right below the $2,014.50 level to be part of the bearish move to the downside. And since then, we have been selling the XAUUSD all the way to the downside. And what makes this more interesting is the fact that we had key structures broken, giving us multiple entries to add more position to our existing trade. So we had structures like the $2,000 level broken for the first time in the last couple of months. We had the 1,986 broken to the downside. Then yesterday we had the breakdown of the 1,980, which gave us a significant move to the downside, as you can see here. So it has been very profitable for us on the XAUUSD, and for those who are part of this profitable trade, well done to you guys for being on standby to catch this move. So right now, what is going to be our plans ahead of the London and New York session today? And remember that we have the first chairman's speech coming up in about 6 to 7 hours from now, and definitely everyone will be looking forward to this event to see what is going to be saying, as it will give us an insight into the monetary policy of the Federal Reserve. So in that regard, we are going to be looking at this from a technical standpoint to see how we could actually position ourselves ahead of the event to take advantage of a trading opportunity. Now, looking at the structure here, the first thing I observed here is the fact that price action successfully broke down the support line of that descending channel right here yesterday, which is a very good sign that sellers are still very strong in this market. However, something interesting happened during the New York session yesterday, when we saw buy pressure resume just right around that 1,952 area to start inciting something that looks more like a retracement phase to me, actually. So following this impulsive move to the downside, we saw this whole situation here, which I'm calling a retracement phase at this point. And how far this retracement phase will go is what we don't know around now. Is it going to retest the trend line that was broken to incite another wave of sell-off to the downside? That is one question we want to consider while we review this chart. Or are we going to see a situation where price will climb back probably into the trend, into the resistant line of that descending channel, or even get to as far back as a $2,000 mark, which you all know is a very, very strong key level for us in the last couple of months in this market. So right now, what we are going to be doing now is to focus our attention around this consolidation phase and this potential retracement phase at this point. So I was able to spot a simple setup, which I used a different chart so that we can have a clean look into the market. And this was what I was able to spot here on the 1 hour time frame. So what I did here was to consider what has been happening in the last 1 week, and I emphasized the level of strength of the sellers in this market. And what I did here was to have this trend line figured out. So we also have another one. So we have a couple of trend line mapped out at this point. Now, zooming right into that area between the 1,950 and the 1,970, we have a couple of key levels here, which we shall be using to guide our trading activity for today. Now, how are we going to use this? Now, we already have the breakout of the 1,960 here, which I actually missed. I was asleep then. If I was around, I would have taken advantage of this move, as it is a very beautiful reversal pattern following the double bottom structure noticed around this level, as you can see. So the 1960 is a very solid neckline for that reversal pattern here. And in fact, price action came back to retest the structure, as you can see here, further validating the potency of that reversal pattern. And I think there is a high chance that we could still have a breakout of the 1970 today. And as a result of this, what I did here was to place my buy stop order above the 1970 with the hopes that I might be able to take advantage of a buy opportunity. And one thing I would like to state around that area is that the 1970 level, as you can see here, is a very critical point in this market, as it shares a beautiful confluence with that trend line that you can see there. So anything could actually happen there. So it's a risk worth taking for me. We've been profitable so far this week, so I could still afford to use some of my profits to risk this position out and see if it's going to work out for a bullish momentum. So we are going to see if price will break out the structure. So if it does, then we want to be joining a bullish momentum, and depending on how price action reacts to this trend line will now determine if we are going to be adding more position to our existing trade, or probably get ready to join a bearish move to the downside. So this is what I'm looking out for buying opportunities in this market. So as long as price action remains above that 1960, we look out for more opportunities to buy. Then a breakout of the 1970 definitely will confirm the validity of this move. And one thing I would like to state here is that please note that this breakout of the 1970 at any point is a counter trend opportunity, and because of the fact that it's a counter trend opportunity, we want to be very, very conscious during this trade. Be around to be able to move your stop loss accordingly to lock in some profit, as anything could actually happen considering the strong momentum prior to this moment. So that on the bullish expectation in this market. That's how we are going to be buying the XAUUSD today. Now let's talk about the bearish expectation in this market. Now, if price action gets into the 1970 area, which I was talking about earlier, which also shares a confluence with that trend line. Let me zoom out so that you can see what I'm talking about here. So if I highlight the structure out, you will see that we have a trend line which has been respected in the last 1 week. And if price action gets into that area and we begin to see sell pressure resume from that structure, then it's a clear sign that we might likely be going in for another wave of bearish momentum to the downside. And so if this happens, we also want structures that will help us to validate this. And as a result of this, we acknowledge the fact that price action has been finding higher lows here. So we want to acknowledge the higher lows by connecting it together to give us something to look at while we try to take advantage of a bearish move. So we are going to be doing some readjustment when we bring back our line chart, our candle chart rather. So let me draw this out first of all, and then we bring back our candle chart to map out this old structure that we have here. So I have something simple like this. So this trend line here will be our guide for today. So as long as price action remains above this trend line, we feel comfortable in the buy position. But at any point in time, like I said, if price action gets into the structure and we continue to see selling pressure, it's a clear sign that we are going bearish, but we need price to break down this trend line to give us a confirmation to join the bearish momentum to the downside. So this is how we are going to be selling the XAUUSD today. So a further breakdown of the 1960 has a tendency of giving us more opportunity to add more position, and a final breakdown of the 1950 will be the biggest area to join massively to the downside. As a breakout of the 1950, I'm of the opinion that price action will move to the downside very massively. So let's see how price action plays out in the next couple of hours, and be rest assured that I will be with you right in the comment section of both my TradingView and Telegram platform to give you updates as at when due. If you have any questions, feel free to let me know in the comment section. So I will be moving on to the last pair for today, which is the USDJPY, which is another profitable trade for us this week, as we have been buying this pair since Tuesday. And remember, things started very slow for us on the USDJPY. So let's run through that quickly and see what has been going on in this market. So at the beginning of the week, we saw this old chopper situation where price action was trapped within a range between the 136.260 and the 135.700, which happens to be our key level for the week. And for the fact that price action is sitting above our key level, the tendency of a bullish momentum was higher than the expectations of selling the USDJPY this week. So we had a buy stop order above the 136.260 so that we can catch that opportunity, and that was exactly what happened here. And in fact, if you had missed out on that one, the market gave us a second chance to be part of that move as it came back to retest that structure, and since then it has continued to find higher highs and higher lows in this market. And one interesting thing about this whole structure is that it gave us the privilege of having multiple entries in this market, as we had key structures like the 136.650. We had another position there. We had structures at the 137.200. We had positions there too as well. And then we also had at the 137.700, where we also had another position too as well, until price action hit our TP target yesterday at around the 138.400 area. So it was quite a profitable trade for us all here on the USDJPY for the week, and congrats to everyone who has been part of this profitable journey. So as we head into the New York and London session today, what is going to be our plans? How do we expect to take advantage of a potential opportunity today? Well, the first thing I did here this morning was to acknowledge the fact that price action has been bullish since the beginning of the week, and to acknowledge that we have a trend line to emphasize the strength of the buyers in this market. And you can see, after connecting the series of higher lows here, we have a trend line mapped out, consistently respected, to give us a bullish momentum in this market. And one thing happens this morning which makes this whole situation and turn to shift to the other side here, and that is what happened here this morning. We saw the breakdown of that trend line for the first time this week, which for me is a sign that we might likely be seeing a retracement of the bullish move we have been witnessing since the beginning of the week. And like I told you before at the beginning of the session, that Fridays is always peculiar with profit-taking activities, as those who had bought at a very cheap price will definitely want to be doing some profit-taking activities towards the weekend, as they never can tell what could happen during the weekend before the new week begins. So some of them will have been offloading some of their positions, and this will reflect on the chart as a retracement of the impulse leg. So will this turn out to be a true breakdown? That is one question we are going to be asking. And if it does turn out to be a true breakdown, how do we intend to take advantage of this move? Now that we have a breakdown of the structure, so we have the breakdown of the trend line and the breakdown of the 138.300 area, that's another structure here that we are going to be using to guide our trading activity today. So we have the breakdown of the structure, and what I mentioned during my commentary this morning on the USDJPY on my public platform is that we want to see price action do a retest of that level to give us an opportunity to be part of a bearish move. So if price action does retest the structure, we are going to be looking out for selling pressure on our lower time frame, confirming that buyers are finding it difficult to climb back above the 138.300. And if this happens, we want to be part of a bearish move with a sell stop order below the 137.950. We want to be having more positions, and the breakdown of the 137.700, more positions too, as well, as we want to ride the move all the way to the downside. Now, there is a caveat to this whole structure here, which we will see better if I scale up into the 4 hours time frame. Okay, so I think I didn't map that out on the, so let's just zoom out so that we can see things more clearly here. So if you look at this from an holistic point of view, this is the 1 hour time frame, and looking at what has been happening in this market since last week Thursday, you will see that the bullish momentum did not just start this week, it started last week, and we saw how price action had continued to find higher lows, and we had this whole trend line figured out at the beginning of this week. So one thing here is that if the bearish momentum continues to the downside, it might likely come into this trend line again to respect it, to push price for another wave of bullish momentum. So it depends on how price action reacts to this area that will determine if we are going to be adding more sell position to our existing trade or get ready for another wave of bearish of bullish momentum. So if we start seeing buy pressure around this area, we will have no choice than to look out for buying opportunity. But if price breaks down the trend line, then at this point we might likely be seeing a sell-off in this market. So let's be on standby for all these opportunities. So you might want to screenshot my screen so that you can use it as a reference point in to make whenever you're about to make your individual decision. So things are looking very bearish this morning as long as price action remains below the 138.300 area and the trend line, the bullish trend line that was broken this morning. So as long as price remains below those structures, we feel comfortable in a sell position while we look out for more opportunities to add to our existing trade. Now, to make things more simpler, I have a trend line which I have highlighted in red color, which will be guiding this bearish move to the downside. So as long as price action remains below the trend line, we look out for more opportunities to sell. Now, in as much as we're looking out for selling opportunities in this market, you know how we do it. We know how we do it. We want to also keep tabs with the potentials of buyers too. Since it has been a very strong bullish momentum since the beginning of the week, we definitely know that buyers could still come in at any point in time to push price to the upside. So if this is going to be the case here, I will be looking out for buying opportunity if price action breaches this trend line to the upside and I begin to see buy pressure resume just right above the 138.300. And if this happens, I want to be getting ready to buy the USDJPY with a buy stop order above the 138.750. I want to be adding more position to my existing trade. So these are my views here on the USDJPY, and it's on this note I want to call it a day here. It has been a wonderful week for us on this platform as we were quite profitable on all the instruments we were monitoring since the beginning of the week. So well done to you guys for being on standby, and I wish you the best of luck during the London and the New York session today. And remember that we have an high impact event coming up in about 6 to 7 hours from now in the form of the Fed chairman's speech. So we want to be looking forward to that one. So if you have any open positions running prior to that event, kindly move your stop losses, lock in, secure your position just in case of volatility, price movement that could happen prior, within, and after the event. So on this note, I wish you best of luck today. Do have a wonderful and beautiful day out there. So hoping to see you right in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.